Welcome back to our channel. Today we'll be talking about the UK tax system. Make sure you press subscribe so you don't miss out on our future videos, as we will be releasing loads of useful information in the coming months and covering upcoming changes to UK taxes. So let's dive into UK taxes. Understanding the different types of taxes can help you manage your finances better and prepare for what to expect. And if you understand how taxes work, you can budget better and even save some money. And who doesn't love saving money, eh? So let's break it down. First up, we have income tax. This is a tax on your earnings. It's one of the most significant sources of revenue for the UK government. The amount of income tax you pay depends on how much you earn. It's a system designed to be fairer, with those earning more contributing more. Let's look at the current tax bands. The first band, you might say, is the personal allowance. If you earn up to £12,570 a year, you pay absolutely nothing in income tax. Then we have the basic rate. If your income falls between £12,571 and £50,270, you'll pay 20% income tax. For those earning a bit more, between £50,271 and £150,000, you'll be in the higher rate band, paying 40% income tax. And lastly, for those lucky few earning over £150,000, you'll be in the additional rate band, paying 45%. Check the HMRC website, sign up for our newsletter, or give us a call and we'll be happy to answer any questions you have. Next, we have National Insurance, or NI for short. Think of this as your contribution to the UK's social safety net. It helps fund essential state benefits, including the NHS and the state pension. If you're employed, your national insurance contributions are automatically deducted from your salary. The rates for employees fall under what's called Class 1. You pay 12% on earnings between £184 and £967 a week, and then 2% on anything you earn above that. For those of you who are self-employed, the rules are a little different. Understanding national insurance is crucial, as it directly affects your eligibility for certain benefits. Now, let's talk about value-added tax, commonly known as VAT. This is a consumption tax, meaning it's added to the price of goods and services. It's a bit of a sneaky one because it's not always immediately obvious how much VAT you're paying. The standard rate of VAT in the UK is currently 20%, but there are reduced rates for certain items, which is good news. For essential items like home energy and children's car seats, the VAT rate is just 5%, and for some necessities like food, children's clothing and books, there's no VAT at all, 0%. Understanding VAT is essential for both consumers and business owners. Chapter 4. Capital gains tax profiting from assets. This tax kicks in when you make a profit from selling an asset that's increased in value. This could be anything from a property that's gone up in price to stocks that have performed well, or even valuable collectibles. The good news is, you don't have to pay capital gains tax on every little profit you make. You have an annual exempt amount, which is currently £12,300. If your total gains in a year are less than that, you're off the hook. However, if your profits exceed this amount, you'll need to pay capital gains tax on the difference. For basic rate taxpayers, the rate is 10%. For those in the higher and additional rate income tax bands, you'll be looking at a 20% capital gains tax rate. Keep those records organized, folks. Chapter 5. Inheritance tax planning for the future. This is a tax levied on the estate of someone who has passed away. The good news is, not everyone has to pay inheritance tax. There's a threshold currently set at £325,000. If the total value of the estate is below this threshold, no inheritance tax is due. However, if the estate is valued above this limit, it may be subject to a tax rate of 40% on the amount exceeding the threshold. There are exemptions and reliefs available that can potentially reduce your inheritance tax liability. One of the most significant is the residence nil rate band, which can increase the tax-free threshold if you're leaving your main home to direct descendants. Planning for inheritance tax is crucial for effective estate management. Chapter 6. Council tax funding your local community. This is a local tax that goes towards funding essential services in your local community. Think of things like rubbish collection, street cleaning, and maintaining those lovely local parks we all enjoy. Council tax also contributes to funding local schools and other essential services. The amount of council tax you pay depends on the value of your property. Properties are assigned to a valuation band from A to H, with Band A being the lowest and Band H the highest. There are discounts available for single occupants or those who qualify for certain exemptions. It's always worth checking your local council's website to see if you're eligible for any reductions. Remember, paying your council tax on time is important. Outro UK taxes. You've got this. So there you have it, a whirlwind tour of the UK tax system. With a little understanding, you can navigate the world of taxes with confidence. In summary, we've covered the big ones: income tax, national insurance, VAT, capital gains tax, inheritance tax, and council tax. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more informative content. Have questions about taxes or want us to cover a specific topic next? Leave a comment below. Thanks for watching and see you in the next video.